In this video, I want to talk about the long silver against the Australian dollar position. I am potentially thinking about adding to the position, and that's because I'm a little bit underexposed to silver at the moment. I've got 0.49% risk in the position after I close out a bit of it. And essentially, looking at it from a technical perspective, on an hourly basis, it looks like we've got a bit of coiling and a bit of a breakout pattern forming. Indicate this could potentially go a bit higher. It's not very obvious at the moment, so it's definitely not a high conviction trade. But I do believe that buying precious metals at the moment is the play to hedge against the political unrest in Hong Kong, trade war with the US and China. It's better than shorting stocks because the players in the stock market are people who are shorting to make money, who are buying because they see value, and essentially people in the markets have a lot of conflicting views on the stock market, and therefore I think there's a lot of whipsaw and a lot of volatility going on in the stock market. Whereas people who are buying gold at the moment, I think a lot of people are buying gold as a hedge. Therefore, it's actually less likely, in my opinion, to see a big drop in gold because the people who are currently holding gold and who can actually sell gold are people who are going to hold on, especially if things go poorly in the economy or in the political sphere. But they will also hold even if things go well because they originally bought it as a hedge in the first place. So in terms of my system, I'm increasing my precious metal exposure, especially silver. So there is a fair bit of correlation here. So we've got what, 2.5 plus 1.5, about 5%, 4% risk. Now, that's a decent amount, and there's a fair bit of correlation in the portfolio there. But another play that I am doing is essentially I'm playing a reversion in the gold-silver ratio. So you can see that the gold was outperforming silver, and then now it's kind of reversed that trend here. I think we might see that continue on. So there's a potential play on that. Technical wise, as I just spoke about, seems like there's a breakout pattern forming on the hourly. Intermarket wise, this is exactly what I'm talking about. There is this ratio in gold silver potentially overdone and playing on it reverting to the mean. Now, sentiment wise, I think there's a bit of fear, a bit of apprehensiveness in the markets due to the trade war and due to the Hong Kong situation. I think there is, in terms of the actual trade itself, there's a 10% chance that it will go to 27, around here. 20% chance that it goes to 26. 30% chance that it just kind of goes nowhere. And a 20% chance that it goes to 24, which is probably best seen on the daily. And another 20% chance that it'll go to 23 down here. So if the price does move up, I'm going to hold. If the price moves down, I will leg out. And I think my psychology is fairly neutral right now, although perhaps I've been affected a little bit by the media showing all the Hong Kong protests and what Carl Bass is saying about China. And in terms of my actual how I'm planning to play it, That's what it is. That's how I plan to play it right there. I think I'll buy around 25, stop loss at 21, a profit target 27.5. Might be stretching it a little bit, but yeah, I'll be looking to get in around where it is now with a stop loss down here, hard stop. They'll be risking 0.99% of my capital. The return on risk ratio is fairly poor. It's probably something that I'm not really paying too much attention at the moment because I know I'm going to get out a lot earlier than the level I've set, which is 21. So we'll see how it all plays out, but that's the long silver against the Australian dollar position.